But a couple of such CEOs, fintech CEOs, you're having the lunch with. Can you name a couple of them? Or you may have lunch with. Are there any prospective handshakes with fintech companies?
Oh, we are shaking hands with them in a partnership all the time. I mean, today, I don't want to be standing on a platform like this and taking names, but if you take, as I said, any large fintech worth its name, in 6 months, I guarantee you they will be working with Axis in a very, very deep relationship. Why? Because we have created a technology platform where they can combine with us and work with us. It's very easy to say, I want to be a partnership with X. But you need the APIs, you need the technology platform to be able to integrate with each other seamlessly. We have that. They see us as a partner who has a track record of working with other fintechs, and those fintechs are saying very good things about us. So they realize, oh God, these guys are already working with them and they know how to make it work. They understand us. So as you put these things in place, you start getting, now we are getting fintechs coming to us and saying that I have a incumbent bank, but actually I want to work with you because you understand me better. So you are seeing that. As luck would have it, just today evening, we do something called Startup Social in Axis Bank. And today we have one such event in Mumbai where there will be 150 startups who will be present in a function where the top management team of Axis is also there. This is our platform to ensure that we understand what the fintechs want, understand how the partnership can become bigger, and they also appreciate where we are coming from and get to meet all the top people of Axis Bank and Axis Group. So, by the way, we have done these events in Delhi, Bombay, Bangalore, Hyderabad. So, we are doing it regularly and collaborating with them to ensure that these partnerships can become more meaningful.
Mr. Chaudhry, now that you've completed the acquisition of Citibank's consumer business, how do you look at leveraging the vast distribution network? I know it's been a long ride. How do you plan to take it ahead, sir?
So, well, Citi had only 21 branches, but they have been in the country for 120 years as a retail bank. Imagine a franchise which has been created over 120 years, and that's why when we announced the acquisition, we said it's a deal of a lifetime. Because a franchise which has been created so successfully over such a long period of time has great set of customers, great set of policies, processes which have evolved over a period of time. And we said that we are acquiring this business for 5 or 6 reasons. One, obviously franchise has been around for a long period of time. They have a great credit card franchise. We were seen most as a mass affluent player. They were an affluent player. The complementarity was very, very high. They had a great deposit franchise, so we got deposits in, and today, you know, with the growth in deposits, all deposits are welcome. Third, they have been known in the market for their service. They had an in-house call center, which again have evolved over a long period of time, and the customers swear by them for the service. So we are now extending it to other parts of Axis, and we are tripling the strength of in-house call center people who can serve customers of Axis and erstwhile Citi. We got great talent pool. A pretty profitable franchise. We got it at a price where we believe we did not pay too much for it. And the best part is we took it over on March 1st. 97% of the people joined us. Customer retention has been extremely high. We recently had an analyst day where we shared the data and showed that as per our models, every business which we took over is operating anywhere between 100 to 130% of what we had put in our models. So in that sense, the acquisition has gone extremely well. There is a big date coming up where we shift from Citi systems to Axis systems, but we've been working on it for a long period of time and we'll be able to execute it. So I'm quite happy and proud of the fact that Indian franchise has gone and taken over a 120-year-old franchise. Good for India.
On a wintry day in Delhi, cut to Bombay. So a lot of non-banking financial companies are set for a credit squeeze, Mr. Chaudhry. The November 16 decision of the Reserve Bank of India with regard to the unsecured lending, where they decided that they would increase the risk weight for the unsecured. How much of that is a concern, the unsecured lending, and how do you look at that decision at its appropriateness from the RBI?
So again, just putting some reference to context here, the retail loans in India over the last 2 years have grown at the rate of about 25% in comparison to the overall advances growth rate, which has been almost 13.2%. So the rate of growth has been quite high. And in that, the rate of growth of unsecured loans has been even faster. When RBI steps back and looks at all the data which is coming their way, and they do look at data very, very extensively, what they are seeing is that in loans below 50,000, the NPL rates are quite high. They are seeing that the fintechs, wherever they are involved in giving out loans, the NPLs are quite high. The pace of growth on the unsecured side has been quite high. And they want to proactively take measures to ensure that it does not become a problem in the system if the cycle was to turn. And they're also seeing this interconnectedness in the sense that the banks lending to NBFCs has gone up substantially, and NBFCs in turn are also expanding their retail franchise very, very rapidly. So it's not only directly, but indirectly also the exposure is quite high. So in that sense, RBI is just a little bit worried about the exuberance, is worried about the fact that the unsecured, the first signs of NPLs are visible, is worried that the fintechs are maybe overdoing it, and it is also worried about the leverage of some of the borrowers, and they're not understanding and appreciating what's going on. So I think they have taken a proactive measure. They're giving a signal to the market, slow down. They're giving a signal to the market that we are going to be very watchful. I don't think RBI is saying this is the only measure they will take. They might take further measures if they're not satisfied with some tempering which they expect as a result of this particular measure they have taken. I think we have an extremely knowledgeable, smart, on-the-ball regulator, and we should expect that to continue. So in my view, it's the right step. If you were hearing RBI and the governor consistently, and really hearing them, this is not a surprise. I think we get surprised because maybe we don't hear what they're saying. Now they are saying, exuberance, please watch, don't grow that much. Now if you don't hear it, RBI will again come down heavily on the people involved. So we should expect that. But I think it's the right step. We want an extremely healthy financial services sector. We have come out of a crisis. RBI, rightly so, does not want it to be repeated in any form or shape, not even close to it. So it's the right thing to do.